Okay, I record this video on Sunday, the 1st of March 2020. It's just gone 2 p.m. Chicago time. Hope you're doing well. Looking forward to Monday. And I did say in yesterday's video, I'd do a video update on the gold and silver charts. So hopefully this video will be a little bit shorter than yesterday's. But we need to talk about big blue professional spiky bars because we see those on a bunch of charts, but particularly on gold and silver with Friday's activity. So, first of all, let's deal with the gold chart. We've got the continuous contract on a daily chart. So this is at GC on TradeStation, gives you continuous contract. And it's the usual setup. On the right-hand side, we have all the price-based indicators with beta sine wave. And we've got below the price bars the cycles happening in the highest time frame, the thick lines, and the intermediate time frames, the narrower lines. And that gives us support and resistance levels that we can print on all three time frames, the lowest time frame, the intermediate time frame, and the highest time frames here. And then strength is shown with red bars and weakness with white bars. And then on the left-hand side, we have the volume-based indicators. So first of all, beta momentum down below the price bars, showing us exhaustion and bearish and bullish divergence patterns. Those are also printed. Those signals are printed above the price bars themselves. And then we have beta pro-am, which is based on the average trade size, which we use to identify professional and amateur activities. So blue bars are professional bars, yellow bars are amateur bars. And then we got confirmed uptrends and downtrends with these background paintings, red for confirmed uptrend and grey for confirmed downtrend. So I know that's a bit of a mouthful I go through every time I look at the charts, but you know, for people who are new to the channel, new to looking at these charts, that's what's going on. A quick revision. So this was Friday's activity here, and you can see we have a big blue professional spiky bar. Right there, kind of with a big sell-off kind of started at 1660 and got us down to 1560s, so $100 move in gold, which is huge on Friday's activity. And what does it mean? Well, first of all, it means that there's professional activity. We had professional activity just prior to that, the day before, and that was definitely professional profit taking up here at these highs after exhaustion buys. So that's professional profit taking. And I'm sure at the beginning of the day there's professional profit taking as we're forcing this move down. But as the move accelerates on the downside and kind of comes in here, there's professionals kind of picking it up at the low because we've got a $100 move in gold. That's huge. We're going to trade that range from kind of top to bottom as the professionals. And with that kind of a move psychologically, the amateurs are all kind of freaked out and scared, and they start kind of dumping positions, and the professionals start picking them up kind of down here at the bottoms. But what it means kind of going forward is what we'll typically see with a big ranging spiky blue bar like that is we'll play the range. We'll play the bottom of this range, we'll kind of possibly go through it by a little bit, we'll come back into it, and then we'll test back up to the highs of it, maybe go through the highs of it a little bit, and just get everybody confused as to directionally what it's doing. But it's an important bar, so expect the highs and lows of this to be played. So we might see some weakness in the next few days, but then we could easily kind of start to rally back in the following days and weeks into the middle of the range and then test the top of the range. Who knows how long that kind of process is going to take, but directionally we don't know which way gold or silver is going to break at the moment. We just know it's going to kind of continue in that range. So that's the significance of big blue professional kind of spiky bar. Let us talk about price cycles on the right-hand chart here. So first of all, I talk about end of trends rippling through the time frames, and you can see on the lowest time frame we had a little sequence, end of trend, end of trend. That gives us a left shoulder. Sometimes we just get the one up here. In this case, the market was pretty strong. We had a little bit of congestion. We kept on going through, and that was our left shoulder kind of marked here, the head and shoulder pattern. So then we come back and we start making the pullback. You can see it's not easy to see there, but that's a little pullback. There we go, kind of text. showing us that that's the pullback support in the intermediate time frame, and we go pullback to end of trend on the intermediate time frame. We also shoot past that after a little bit of congestion. We happen to put in a little pullback to end of trend on the lowest time frame. But this is the left shoulder. That's the head of this move, kind of signaled here. And what we'll do is we'll weaken until we find support coming in on the highest time frame. So when we get the red, thick red line crossing above the cyan blue line here, that's when we're due for cyclical support on the highest time frame. So it means because we're above resistance on this highest time frame, the most likely move is that we'll put in pullback to end of trend, some final kind of push up to test the highs when that happens. But I would expect we'll have a little bit of weakness kind of going on here. Let's wait and see when this crosses, when we get kind of a cyclical cross in due at that point, and then we'll shoot back up, put in pullback to end of trend on the highest time frame. So because we're above resistance on this highest time frame, we're likely having to put in pullback to end of trend on this highest time frame. So I don't think the uptrend has played itself out, but this has definitely freaked out a lot of people. A lot of people kind of dumped their positions, and the professionals will wait until it settles back. We get this cross, they'll come in again, and they'll push it to new highs. So that is the situation on the gold chart. The silver chart is different. Silver chart also has a big blue professional spiky bar here. You can see this on Friday's activity. Bang. What is that? $18 down to $16.50. So $1.50 move in silver, which is pretty significant, 10%-ish move. And again, the same thing, I would expect the ranges to be played here, because now the professionals started that kind of move on the way down, because we know that they were taking profits up here at 20 bucks. All these blue professional bars on the exhaustion buy, you can see there, they were taking profits there, and we just came back into that range, into that range, into that range, and then they just used that opportunity at 18 to force it down, and they're coming back in at 16.50s or 17s. So just because it's had a good kind of move on the downside. But, that's kind of early buying when you get these exhaustion patterns. I expect it to kind of continue weakening a little bit, then it'll come back into the range, and then it'll move to the top of range. And so it'll freak everybody out. People won't know, look, is this a breakout or a breakdown? And it just becomes unclear. The situation with silver, though, is different in terms of cycles than it was for gold. So you can see this last move up into exhaustion buying. We had a move on support to resistance on the highest time frame. So we hit resistance on the highest time frame. Remember, on gold, we shot through resistance on the highest time frame into a strong uptrend. On silver, we just bounced off that 20 level resistance on the highest time frame. Underneath that, we'd put in a little pullback to end of trend move. So syncing up a trend move on the lowest time frame, syncing up with a cyclical move on the highest time frame, we're likely to get resistance. And then on the intermediate time frame, we did not put in a pullback to end of trend because the support level was below this breakout. So all we did was played out with a support to resistance. So as soon as we'd had all those three moves kind of going, so the trend move on the lowest time frame, a cyclical resistance on the highest time frame, and a cyclical resistance on the intermediate time frame, all of those, we'd played out all of that cyclical energy, if you like, and so now that kind of meant we were exhausted at 19 bucks, and that's why we kind of fell off into this downtrend. We've broken through support on this highest time frame here, not turned it into a downtrend yet, and I don't think this necessarily will turn into a downtrend quite yet, because we're going to play these support and resistance levels kind of going forward. And at some point we'll have cyclical support come in on the silver chart here. So we've got to play ourselves into that and find support, and we'll kind of have another move from there, a support to resistance move. And so when that kind of comes together, gold and silver, silver's been lagging gold in this last move. It kind of caught up, but it's totally different in terms of character. You can see the weakness in silver. It was late into this rally. The rally had already started in gold. Let me just compare those two charts. So the rally in gold started in October 18, and in October 18 we were still basing in silver. It wasn't until July of 19 that we got going on the silver chart. So silver has fundamentally been a weaker trend than gold, and I expect it will kind of lead on the way down because it's not got the fundamental strength that gold is. So we're going to see kind of weaker moves in silver And then this move support to resistance will be interesting. Where does that kind of come in, that support level? We know the breakout level was around 15, 16 bucks, so maybe we'll kind of need to trade into 15 and a half, 16 bucks, something like that before that support kind of comes in, and then we'll have that kind of move back up. So I don't think it's fundamental trend changes in gold and silver. I think we're going to be playing the ranges and freaking a lot of people out, and they kind of don't know which way it's going until they get frustrated, and then those supports will come in on gold and silver at some point kind of together when we get those these moves on the downside finally completed, and then we'll have another push back up gold, putting in pullback to end of trend on the highest time frame. So the good move, up move in gold was over, and we're just going to be consolidating, playing the ranges for a while until we come back into that support and we have that kind of move back up in gold. We'll have to see where it goes from there. So interested to see how the markets open Sunday evening into Monday's open. Just be checking my charts there, not necessarily trading it, but looking forward to Monday's trade because I think we're going to have fun.